Hello there and welcome to NCBA Money Mastery Series Season 4, where we teach you how to make your money work for you. My name is Evelyne Musyoka, and on this show we are excited about numbers because at NCBA the numbers that matter to you matter to us. Here's some numbers that matter in Kenya's mortgage market. 64% of Kenyans live in rented houses. 26,700 is the number of mortgages in Kenya, and 18 is the minimum age in which one can qualify for a mortgage. Now, owning a home is a dream for a lot of people, but for Kenyans, it's quite a source of frustration. Mortgage process comes with a lot of challenges such as high property costs, high costs of construction, a lengthy property transfer process, lack of knowledge on mortgage financing, and unavailable of units that are cheap for mortgage financing. But is there more to this mortgage story? We have on today's show Stella Mutai, the head of retail property finance at NCBA Bank. She'll be answering this and a lot more questions for you. Stella, welcome to the show.
Thank you for having me here.
Thank you. Thank you, Stella. We'll start with the numbers. Quite worrying. 26,700. That's such a small number. Is it so difficult to get a mortgage in Kenya?
I may say it's not difficult. Yes, the numbers, it's worrisome. Reason being, these are the numbers that are recorded by CBK. The Central Bank of Kenya carries out an annual survey after every year, and these are recorded by various financial institutions. And the reason why we have these numbers, as you have rightly said, is that because one, the property prices are high, as well as also people do not know where to find these units, and also people do not understand the mortgage process. And one thing also, you will note that people fear the whole mortgage journey. They do not know where to start. They feel they are afraid of falling into prey of dubious deals in the market, so they do not know where to start. But the good thing at NCBA, you're able to guide customers and show them where to start and take them through the various steps that we have.
Thank you, Stella. Indeed, a lot of Kenyans are very scared about the mortgage process. So from a credible source, what are the steps that come in when you want to apply for a mortgage?
Excellent, Evelyne. That's a very good question, and I would like the Kenyans out there to be able to understand how. For instance, if I want to buy this property, how do I go about it? First of all, it could be you have got that property that you've been wanting to buy, or you've seen a friend of yours has referred you to a certain property. So that's the best option, the first place that you could be in. Yes, or it could also you want to buy a property, you can be able to walk into the bank, and the bank will be able to guide you on how much you qualify for. Then from that, you're able to go to the market to be able to look for the property that you've been wanting to buy. And the instance whereby you do not know where to start, at NCBA, we have our property center, whereby we have listed quite a number of properties, and customers are able to select from the array of properties that we have. So that's the first step, is for you to have property that you want to buy. Once you get that property, then the next step is for us to be able to you apply for the loan or for the mortgage facility. Application, just we are able to walk into our 84 branches. We have 84 branches in the country. Walk into any branch, walk into our property center, and we'll be able to guide you on how to fill in those and also provide the required documents. The documents could be either whether you're working or whether you're self-employed. You're able to give us different type of documentations. So once you give us the documentations and you filled in the forms, we progress whereby we approve the facility depending on your income. Because one thing that we say, the two things matter when you're buying a property is your the property and the income. So those are the two factors that we look at. So once you apply the loan and we approve the facility, we give you an offer letter. An offer letter is a contract in between you as a buyer. You want to buy a property, and it's just the terms that maybe, like for instance, we are financing for a period of 25 years. At NCBA, the maximum period we're able to finance our customers is 25 years. So you're able to choose the term that you are comfortable with, and also depending on your income. So once you get the offer letter and you've accepted the offer letter, we progress to carrying out our evaluation of our property. We need to carry out a valuation of the property to be able to know what is the value of this property, if there are any hindrances that may make you not to own this property. Some of the hindrances that make people not to own properties, it could be this property could be located in the famous Dongo report. This property could be near a line, it could be near the public road, or even it could be a public property. So we try customers by conducting a evaluation to be able to check on what could be the limiting factor that may cause someone not to be able to proceed to the next step. So once we've done the evaluation, and we've confirmed that everything progress to the legal process. Legal process is where by now it's a little bit complicated, but if I'm able to highlight what happens at the legal process is whereby we give instructions to the lawyers in our panel to be able to register the property in your name, Evelyne. So once the property is registered in your name and it's also registered in the banks, what we call charging, the property is held by the bank for the period that will be new, then now we are able to release the money to the vendor. The whole process in 90 days of this process, because we have well-equipped relationship managers. Also, we have our property center and our property finance department, whereby we're able to demystify any difficult process for our customer and also handhold our customers through the mortgage journey, hence making it easier for them to own that property that they could be eyeing or they've been dreaming about.
Well explained, Stella. It sounds very technical, from the bank to the lawyers to the vendors. If I was to come and say, as a kid wanting to get mortgage financing, would to get a professional to work with me throughout various steps?
Certainly, Evelyne, once you walk into our 84 branches, you'll meet our relationship managers. Our relationship managers will be able to handhold you as our customer and demystify the whole process. For that, our customers do not pay for that. It's free of charge, and our relationship managers are able to guide customers through the mortgage journey. Then once, for instance, for the valuers and for lawyers, I may say these are the partners we have partnered with, and our customers usually pay according to scale and duration with the lawyers and valuers that we have in the panel. And when it comes to construction, for those who are constructing, we also have our project managers. And for our project managers, what they do they also help in the construction. They are qualified quantity surveyors, and they're able to guide our customers depending on the type of house that you want to be able to construct. So I may say someone should look at, as the mortgage is rocket science, we have the table to handhold our customers' mortgage journey.
Thank you. I like that you mentioned the NCBA RMs will not charge you. For a lot of people, it would be scary to imagine professional support would come with an additional cost. So quite good. Let's move on to interest rates, another very not widely known topic. What are the rates looking like for mortgage finance?
I may say at NCBA, and I'll talk about NCBA, our mortgage rates are very competitive. Currently, we have our 11.9% campaign that we've been running, and it's going to be coming to an end of this month. It's 11.9%. It is fixed for the first 3 years. This enables someone to be able to plan themselves depending on their income. But generally, I may say we have two types of rates in the market, whereby we have the variable rates that varies depending on how the economy is performing, and also we have the fixed rate. You can be able to choose a rate that will be fixed for the term that you take when you are taking up a facility from any institution. Yeah. You
mentioned 11.9%.
Yes.
Say that I want to come and get a property to live in. Would I qualify for that? And if tomorrow I'd come in and I want to get a property to run my business, does the 11.9%?
That's a good question, Evelyne. And I may say that the 11.9% is applicable for our customers. If you want to buy an owner-occupier property, if you want to construct an owner-occupier property, or if you could be in business and you've been thinking of buying your own house, then 9%. And as I said, it's fixed for the first 3 years. And then our customers can be able to choose on those products, whether you want to buy or whether you want to build or whether you're in business and you want to be able to buy your own residential property.
All right. Another question that comes up a lot in terms of mortgages is the misconception that you have to be employed, earning a salaried income for you to get a mortgage. How true is this statement?
That's a notion, I may say, Evelyne, that has been held in the market for the longest. And I would like to be able to demystify that today. And what I can be able to say is that you don't have to be working to get a mortgage at NCBA. You could be running your own business. You could be in partnership. It could be a sole proprietorship. It could also be a company. Or also you could be in consultancy. You can be able to walk into Ntba depending on your source of your income. As long as your source of your income is reliable, it's stable, we can be able to see it from your bank statements. We are able to finance. To note, Evelyne, is that you do not have to be banking with NCBA for you to get a mortgage. You can be able to walk in with your bank statement institution that you have been banking with, and will be able to finance you. All what we require is for you now to be able to start off a relationship with a bank.
Oh, interesting. I think that opens the options for a lot of people, because the initial misconception was that you needed to have a steady monthly income from a source of employment to get a mortgage. Huh?
That's true, Evelyne. You don't have to think that since I'm self-employed, I can't buy my own house. You can be able to buy your own house by walking into Ntba.
Indeed, certainly. Whereas we'll take a short break, but when we come back, we'll be looking at construction loans for those of you in building their own homes. We'll also be looking at the moratoriums that are involved in this and a lot more when we come back. But before we go, in case you have any questions, feel free to share them. Stella and I will be discussing them after the break. Don't go too far.
With our NCBA Bank Home Loan, we can finance up to 105% of your mortgage and give you a repayment period of up to 25 years.
Daddy, that is 25 birthdays for me in our own home. Many suppers together. Lots of laughter with mommy.
We know that it's not about the house, but the many memories made in it. Get an NCBA home loan with up to 105% financing. The name is NCBA, and the numbers that matter to you matter to us. NCBA Bank. Go for it.
Conversations where we teach you how to make your money work for you. The first part of this conversation, we talked about mortgages, interest rates, and now we look at construction loans and how they mean to you if you're interested in building your own property. So Stella, for somebody who wants to build instead of buying, what would be the step for them?
That's a good question, Evelyne. And what I can be able to say is that with the pandemic, we've seen quite a number of customers and also quite a number of people are choosing this option of construction. And at NCBA, we have had to innovate for the sake of our customers. Today we have exciting solutions for our customers. Some of the exciting solutions we have is our construction products, whereby we are able to finance our customers if they want to be able to construct that dream house. So for instance, if I want to construct, maybe say in Nairobi or it's in environs, as a bank, we're able to finance you. All what you need to do is to be able to come up with a team that you would like to work with. And this team is composed of a quantity surveyor, it's also composed of an architect, and it's also composed of maybe a contractor. The role of an architect is to be able to come up the designs for them to be able to read, want to be able to construct your dream house, and then the quantity surveyor will be able to come up costings of how much it costs you to be able to build a house. So once you, that's one of the solutions that then the other solution that we have is the buy and build, as it's sounding, is whereby you buy a plot and you simultaneously construct. So we are able to help our customers to be able to buy that piece of land that they want to buy and then build simultaneously without waiting for long. Then also we have another we call NCBA Easy Build. Our NCBA Easy Build, we take away the burden from our customers, and what we do is that offer all the construction professionals, that is the architect, the engineers, and quantity surveyor, and we have the off-the-shelf designs that our customers can be able to choose from. Some of these designs are available in our website and our king. And the third thing that we do under NCBA Easy Build, financing, because that's our core business. So we make it easier for our customers when they want to be able to get into construction, start that to construct. But also when you look into it, is that when, for instance, someone is construct, we give them a period whereby they pay interest of the money that has been disbursed. We release our money in stages, so our customers are able to be able to only pay the interest of the money that has been disbursed. So for instance, if I'm constructing a house of 10 million, today maybe at the end of the month what you're going to pay is only the interest. You know very well when you're paying a loan, you have two components to pay. You have the interest as well as the principal. So a period of 9 months, which usually has say that a period of 9 months moratorium.
Oh, exactly. So you've actually enlightened us on the fact that there are many options. There's a size that fits everybody, yeah?
Exactly.
All right. The story is that if you're not able to pay, the property will be repossessed. A lot of the times that scares investors who are willing to go into the property market. How does that work?
If the for NCBA is that for NCBA we are in the business of selling a property in case someone defaults, not able to pay, or you are not able to honor monthly repayment. So for instance, you're not able to honor your monthly repayment, what we advise our customers is, and our relationships will be able to guide you on the steps that you can be able to take. One thing that we can choose, either we can be able to choose to restructure your facility depending on your income. That month payment or the mortgage repayment comes in at every end of the month, or has been communicated by the financial institution. So if the mortgage repayment does not falls or goes into arrears, so if it does not, if it goes to arrears, then that every customer has an relationship who is able to guide them on what to do. So for one, we can be able to restore facility, or also we can be able to capitalize on the arrears, but we still have the core business is not to sell a customer's property. Our business is to be able to ensure that you own that property, because you know a home, one thing also, it helps you to be able to stabilize when in terms of income or in property ownership.
Quite comforting knowing that we stand with you throughout the whole process. That are coming in from our viewers. We have Juma watching in from Mombasa. Thank you for joining us, Juma. Juma, how do we check that somebody is eligible for a mortgage?
That's a good question, and to maybe what I can be able to Juma, and thank you for tuning in, Juma, this morning. That earlier stated is that we find out the property that you want to buy. For Juma, who is in business, we can easily be able to look at the bank statements, as well as the type of business that is running and how long that this business has been running. For instance, maybe the business has been running for 2 years or 3 years. We can easily be able to finance based on the financial statements, or based on the bank statements that Juma has. So Juma you should not shy to our branches. We have quite a number of branches in Mombasa, and we'll be able to guide you our relationship property to buy.
Yeah. Thank you. So on the flip side, we have Michael, who is employed. He's just started work to buy a home. Thank you for joining us, Michael. How can we advise Michael?
That's a good question. as asked, Michael says that he earns 45,000 income.
Yes.
I believe that is the net or the gross, as he said.
The net.
Okay. So for instance, for Michael, who is earning 45,000 period of 25 years, Evelyne, what I can be able to state is that our basically like a plot. So for Michael, he can qualify for a loan amount of approximately 3, and that was well affordable housing.
You did that calculation so far. Quite impressive,
Well,
Stella.
Evelyne, we've been on this for long. We're able to calculate clearly and be able to guide our customers, and that's what happens to our relationship managers. That the same thing, they're able to guide our customers to advise them on the best solution.
Impressive. You touched on affordable housing, quite a good option. What would you say about that?
Well, that's a good question, and affordable housing is our customers will be unveiling affordable housing proposition, whereby we finance our customers. Anyone who wants to set Nairobi, we're able to outside Nairobi or elsewhere, that is fine, at a single digit, and as long as you want to be able to buy a decent housing and 150,000 our customers. So it's something that will be unveiling.
Oh, wait, we got lost from where? Blank. So, did they hear audio? Joining us again. Apologies for the technical hitch. We were looking at comments from our viewers. We'll go right away to YouTube. Thank you for joining us, Michael. Michael is saying that he started working recently and he earns 45,000 Kenya shillings net and he'll buy a home. Stella, what advice would we give Michael?
That's a good question, Michael, that you've asked over there, and thank you for tuning in this morning. Looking at the income of 45,000, I may say can be able to qualify for a loan amount of approximately 3 million for a period of 25 years, and you can be able to walk into our branches, and we can be able to guide him that fits in very well. Because one thing that you note, Evelyne, is that our minimum loan amount is 500,000 that you can be able to borrow. So if you've been wanting to buy a plot even worth maybe 700 or even that maybe like 600 at NCBA, we're able to finance. So for Michael, for a loan amount of approximately 3 million for a period of 25 years, which is our maximum tenor period.
You did the numbers so fast. It's quite impressive.
Well, Evelyne have been on, we've been, and so we're able to advise our customers quickly based on the income that they give us, and this also, that's what our relationship managers are able to do. They want when a customer walk into the bank and be able to get them very fast.
Just to build on Michael's question, would we say he'd qualify for financing for affordable housing? And if yes, how does that look like for other Michaels out there who might be willing to invest?
Certainly, yes, that qualifies under our affordable housing proposition, which will be unveiling to the market very soon. And this is where our customers will be able to borrow under single digit for a property worth 6 million and below within Nairobi and its environs. And as long as someone is earning an income of 150,000, they're able to qualify for affordable housing proposition, a single digit, and they'll be able to buy a decent housing which will be within limits. So I may say, as long as somebody is earning an income of 150,000, they'll be able to qualify for this single digit unit that will be unveiling to the market very soon.
Oh, so they are not locked out. You really don't have to start with such a large amount of money to own a property.
You do not have to wait for a long time, Evelyne, for you to qualify for that property that you've been dreaming of, because also of money. You'll note that there is also a property appreciation on annual basis. So the longer you wait, the longer the higher the property price. To start where you are, you've just start coming to the job market. You are earning 45,000 net. You're earning even 30,000. We have a solution for you. Have like maybe from a plot purchase all the way to our construction loans, and able to guide our customers through the various solutions that we have. So don't limit yourself, because as long as you limit yourself, also the property prices go higher, and you need to be able to start building a portfolio earlier. So for instance, for Michael, who is 18 years, but you can imagine, for instance, it'll be in 25 years time, it'll be 40. And so you see, I've already bought his first property, and he can also be able to pay his loan earlier. You do not have to stay with a loan or the mortgage for those 25 years. As a bank, we do not penalize our customers for paying earlier or for putting some amount of money. So Michael can start building his portfolio very early and get into property investment, and be able to own as many properties as possible. That's why you find that maybe the many landlords that we have in Kenya, that's why they started. You start and able to move to the next one. Yeah.
We have Nixon, whose question for joining us. Nixon, if mortgaged properties are insured from natural disasters?
Certainly, yes. That's a good question, and I may say yes. We have insurances for our customers. We have two types of insurances. We have what you call the mortgage protection cover, whereby the customer is covered, or you see, insurance comes in to be able to cover the uncertainties for tomorrow. So a customer is covered in because in case of death or incapacitation, it's not passed over next of kin, the insurance is able to off the loan. And in case of a natural calamity, maybe the flooding, or even if the fire guts down the property, we have a domestic cover whereby we cover the property in case of such uncertainties.
Oh, so definitely that brings a certain peace of mind as you own a property.
Exactly. Yeah? It gives a client as a peace of mind that they know that they are covered for their properties and for their lives are also welcome in case of death or incapacity.
Indeed, indeed. We have Job from Facebook. Thank you, Job, for joining us. Job is picking up on we mentioned earlier when we started 18, the minimum age to apply for. He now asks on the flip side, is there a maximum age to apply for a mortgage?
That's a good question that Job is asking, and I may say that we lend on up to maybe, for instance, for the ones who are employed up to their retirement. So we also have our maximum for business customers or even for lecturers. Most of the lecturers retire up to 70 years. We're able to finance someone even up to 70 years. Even I may say our maximum entry age is as long as you are 60, can be able to finance you. And you see that 65 is the new young people in the society, and that's the time people also thinking about investment. Not be able to shy away at any age group or at whatever age he is, we're able to finance him.
Indeed. Thank you very much. We have Ezra who's joining us. Thank you for joining us. Ezra is asking how mortgage refinancing work and who qualifies for it.
Excellent. That's a good question, Ezra, and thank you for tuning in this morning. And I may say we have our equity release solutions, and equity release is whereby you borrow against an existing property, and for this now enables you to be able to own another property, so you get money out of that property that is not charged to any institution, or even though it's charged to another institution. As a bank, you can be able to have a mortgage out whereby we can to finance you and even refinance you to buy another property or to undertake any investment that you want to be able to carry out and to undertake. So for can be able to come into NCBA, and we'll be able to guide him throughout.
Good. We have Daisy. Daisy is asking us to finance the rent to own option.
That's a good question for Daisy that is asking rent to own. And I may say is that if for instance you want to buy, it's not a property for own occupation, even for investment purposes, we are able to finance our customers. So Daisy should not feel left out. We have our investment solutions or our investment residential facilities that we're able to finance customers. And even for those who want to be able to build for those who want to build a block of office, as a bank, we're able to finance our customers, either when you want project financing, whether you want for rental purposes. So for Daisy, don't shy away to call.
Thank you, Stella. That is all the time that we had for today. Our audience, ladies and gentlemen, that is all the time we had for you on this season, on this episode of Money Mastery Conversations, where we teach you how to make your money work. In case you have any more questions about our products, please feel free to ke.ncbagroup.com, or better yet, you can call the numbers on your screen now. Also, feel free to share, like, and follow our social on our screens right now. And until next time, we'll bring you a different set of numbers that matter. I've been your Musyoka. Goodbye. Take care.